Hi everyone, I'm Andy from Jurong East Investor Center.
Hi, I'm Elijah from Jurong East Investor Center.
Okay, so today we're going to talk about how the millennials generation can lower their risk or maybe try on some low risk investment. Okay, so today, basically, we understand, for people who have totally no investment experience, people who have never buy any investment instrument before, most of the time, they have been told that, investment is always risky. Okay.
Well, yes, there's an element of truth to it. There is risk,
and you can lose money.
That's also true.
Yes, okay.
You can lose money.
Okay, so the thing is, we always think about whether we should start investment or we should not do investment at all, and basically, are we putting the money in the bank? Is it considered an investment?
No.
Okay,
totally not. No,
okay,
no.
so basically, why this is important? Okay, let me explain one thing first before we start. Okay, so number one, right, is basically, like, if you don't invest, right, you cannot beat inflation.
That's true.
And if you cannot beat inflation, and what happened is the things that you eat, the things that you spend on, the house that you stay, or whatever thing that you are going to spend on, right, is getting more expensive. Okay, so eventually, right, your buying power will actually decrease if you do nothing with your money.
Yeah.
Okay, and think about another thing is, your pay. Of course, your pay will increase. Okay, if you work harder every year and take on more responsibility in the company, if you do more sales, okay, your pay will increase. But if you do not invest, right, okay, your hard work and your income, right, will kind of like,
they're always chasing each other.
yeah, they're always chasing each other. And at the end of the day, you have to work harder and harder, and you feel more tired in a way. Okay, so investment
It never end the cycle.
yeah. So investment is something that help you to like generate additional source of income. Okay, so investment is actually a way to generate additional source of income. Yeah. Okay. So first of all, okay, we're talking about risk. Okay, we're talking about risk. Okay, so investment always at risk, but if you don't do investment, then we are like,
You're also at risk
Yeah,
of
you're
running
also
out of money.
yes. Okay. So how can we actually minimize for people who have no experience? What are some of the things that they can do?
Well, okay, so if you look at someone with no experience, I would actually say that go low risk first. Okay. Now think of how long it took for you to save your first 10,000 when you started work, assuming you had finished paying your student loan and all that. Then, if you made a mistake with that money, then how long will it take for you to save the 10,000 back up again? So, generally, when we start, okay, you want to go low risk. Okay, low risk so that you don't lose your capital. If you make some profit, great. Then you're gonna take the profit and take a bit more risk with it. Okay, no problem. If you lose that, you're just losing your profit, not your capital. So it's always important to remember that risk management comes into the picture. As you invest, you actually learn. I can say that over the many years I've been investing, my knowledge has never been better than today. And tomorrow it will probably be even better. Every day is a increasing thing.
Yes.
So when I started low too, because the thought of losing my money, it's really a unpleasant thought.
Yes.
No one wants to lose their money, right? So but I still lost money. I lost a 5-figure sum. So that's when it's kind of like it's school fee that you have to pay. But if you could avoid paying that 5-figure school fee, would you want to do that, right? Because that 5-figure, if you didn't pay that school fee, it can compound to something more. So definitely start low risk first, and as you gain experience, then you can step up to things that are higher risk.
Okay, I actually have one thing in mind. If you, let's say you totally never do any investment, and you are also not improving your investment knowledge, right? Think about this. At the end of the day, where you retire, you get a big sum of money. When you are receiving, let's say, inheritance from your parents, or if you are getting the CPF out from your CPF, what do you do with the money? That's the thing. Okay, and if you do not have any investment knowledge all the while until you are 65, would you actually lose the money at 65? Like many years ago, people would say, don't let your husband go to Batam, after they go 65 when they cash out their CPF, right? So basically some of them, they just like spend it away, and after that they actually live their remaining years broke. So that is I think one of the biggest risks that most people have to worry about.
Yeah.
When they have the money and they don't know how to invest. I think that's actually riskier.
That's also a problem because if you're given money without values, then money tends to be misused.
Yes. Okay. So basically, like, come back to our some ideas to helping the people who are new. Okay. What are some of the low risk strategy or even like instrument that they can go and find out more. Okay. They go and find out more after they watch this video.
So there are a few asset classes, but very broadly, let's start with something that's slightly higher risk and I'll work backwards. All right.
Okay.
So high risk is definitely stocks. You cannot say that stocks have no risk. There is an inherent amount of risk inside, and depending on which market you're looking at, okay, certain markets are definitely very, very much more riskier than Singapore. So look at US. Look at stocks like Tesla. Look at stocks. Oh, by the way, that's not a recommendation, but look at stocks like Tesla, like Facebook. You see the way their price swings.
Yes.
Okay. Now, it's not easy, but ask yourself: if I put 10,000 into Facebook and then tomorrow it dropped 20% overnight, can I take it or not? And then you'll know whether that instrument is for you, or at least for you at this point in time. That you had 200,000, 10,000 is probably not much, but that was all you had. That 10,000 you put it into Facebook. Tomorrow it dropped 20%. Due to something like Cambridge Analytica, the kind of level scandal. If you can't take it, then definitely it's not for you. Go lower down the risk ladder. You can look at things like mutual funds. Balanced mutual funds have an element of bonds inside them with some equity. So some mutual funds are actually pretty decent. So their risk level is definitely lower than that of stocks. If you still cannot take that kind of risk, then you step back down one more level to things like bonds, bond funds, corporate bond funds, and maybe even retail listed bonds on SGX. Now those can be relatively safe. They are intended to return your capital when they mature, but of course we want to avoid things like HIFUX, right? That was also a bond, but it's gone now.
It's gone now.
And if you are really fearful of even things like HIFUX happening to your money,
yes,
then you have to go to guaranteed investments.
So
for example, one of the most popular ones we're looking at, especially for retirement, is something called an annuity. So on annuity side, there's actually basically it's the private sector version of CPF. Now CPF we know grows your money. You don't do a thing about it, just let it grow. So you wanted something more, but in a similar safe fashion, then you're looking at annuities. So annuities carry zero risk. In fact, there is upside potential, but just that there's zero risk. Due to the nature of no risk, cause there is a maximum amount of return they can give you, but that is a small price to pay compared to if you had invested in the wrong stock. Because you will never lose money unless you surrender prematurely.
Yes. Okay.
So by merging all these instruments together in a certain proportion, and that is for you to decide, that we call that blending your portfolio, creating something multi-asset to have an acceptable return but minimal risk.
And also suitable to your characteristic.
Correct.
Okay, so basically comes to the just now what Elijah actually talked about, the different asset class. Okay, let's say you talk about the stock side. Okay, stock side. Okay, in fact, you can start with a very small amount. Okay, so instead of just now you're talking about $10,000. Okay, if you start with a smaller amount, okay, then it will be like 5,000 or even 1,000 or even $2,000. Then you actually minimize your risk. Okay, so instead of totally not doing anything, okay, what I would do, right? If let's say give me like another, if you make me like 10-15 years younger, I will do like I will try out everything like a learning journey.
I've tried.
Yes. Okay, you tried a lot.
I lost some. Yeah.
Okay, so of course you lose some, you make some, but if you learn something along the way, when you lose, it's not really a loss, right? Okay, so basically you still learn something, but the thing is, the difference between like the financial education, right, is you learn it while doing hands-on. But what you actually learn in schools most of the time is more of a theory. Okay, even you are economics and finance students and you never trade, buy, if you never do any trade before, you never invest any money before, whatever you learn is just
it's textbook.
It's just textbook. You might not even help you in your real life. Okay, if you don't work in this industry.
Just a word of caution is sometimes you think you can take a 20% drop in the price, but that's on theory. Once your money is really in it, you will feel the difference.
Yeah, I think maybe we take this opportunity, right, to also share with you. We actually have this workshop, LIM.
Yes.
Okay, LIM. Is it suitable for millennial?
Well, you will need some basic understanding first
Okay.
before you come. But if you have basic understanding of the various asset classes and just want to know more about combining everything together, then yes, that can be a workshop for consideration.
Okay,
Yeah.
so what is this LIM? What is the long form and what is it talking about?
Lifetime income mastery.
Lifetime income
Yes.
mastery. Okay, what is it all about? What can it benefit these people who actually attend this workshop?
So what you will learn is really about how you blend everything together to form income streams. Income streams that will pay you, hopefully for life, of course, and then something that allows you to sit there and receive your income, and with minimal risk, and in the way you intended. So how do you put together knowledge, resources, and whatever is at your disposal to form this? That's what the workshop ultimately aims to teach you, of course.
So basically, it aims to teach you how you can create your own portfolio that pays yourself every month through investment in different asset classes.
That's right.
And also like how you diversify, how you pick the stocks, how you pick the unit trust, how you pick the bond funds.
Yeah.
And also, I think this is some of the like secrets, industrial secrets, right? You can consider that.
I would say that, yeah.
Yeah. Okay. So if you want to know more about this lifetime income mastery, or you want to join us in our this upcoming workshop, okay, you can actually leave a comment below, or you can contact us. In this one of this QR code. Okay. Then we will actually get back to you, invite you to our free seminar. Okay. So thank you for watching this. We hope you learned something in this video, and we'll see you next time.
See you.